In an era marked by economic uncertainty and geopolitical tension, the ongoing trade relations between the United States and China are evolving in ways that could reshape global markets. Recent developments indicate a significant shift in the dynamics between these two economic giants, with potential repercussions for Europe and beyond. The emergence of a new trade consultation mechanism has been hailed as a critical step in addressing long-standing structural issues in international trade, particularly the imbalance between the US and China. On May 15, 2025, both nations announced a temporary easing of tariffs for a 90-day period, a move that initially sparked optimism in financial markets. Stock prices rallied and headlines celebrated what appeared to be a thaw in relations. However, beneath the surface, the establishment of a formal platform for ongoing discussions about currency policies, market access, and non-tariff barriers could herald a more consequential shift in the global economic landscape. Commerce Secretary Howard Lutnick remarked, "The aim is to de-escalate but get trade with China right," emphasizing the administration's commitment to not just short-term relief but a more comprehensive approach to trade relations. Stephen Miran, chair of the President's Council of Economic Advisers, elaborated on these ideas in a November 2024 report, suggesting that the current dollar-centric trade model entraps the U.S. in persistent deficits while encouraging surplus economies like China to maintain their export-heavy models. This structural imbalance has significant implications, as it may limit economic growth in both countries while increasing the risk of geopolitical tensions. The implications of these discussions are profound. As Miran's report outlines, the U.S. is caught in a Triffin world, where the demands of global currency status compel it to run trade deficits that undermine domestic manufacturing. At the same time, China grapples with its own economic challenges, including a property crisis and slowing growth, exposing the vulnerabilities of its reliance on exports. This new dialogue may serve as a catalyst for a broader re-evaluation of the international economic order, moving beyond tactical tariff adjustments to address the foundational issues that drive global trade tensions. Such a recalibration could ultimately help both nations transition to more balanced economic models. However, the success of this initiative hinges on the willingness of both sides to engage in meaningful dialogue and implement structural changes. As these developments unfold, Europe finds itself at a crossroads, with the risk of becoming a dumping ground for cheap goods amid the US-China trade clash. European markets must carefully navigate these shifting dynamics. The potential for the US to weaponize trade relationships has already raised concerns among European nations, which are wary of becoming collateral damage in a larger geopolitical struggle. In the backdrop of these trade negotiations, a recent Democracy Perception Index revealed a striking decline in the global perception of the United States, with respondents from over 100 countries rating China more favorably than the US. This shift in public opinion underscores the growing disillusionment with American governance and the increasing appeal of the Chinese model, which emphasizes pragmatic development and national unity. As the landscape of global trade continues to evolve, the reciprocal relationship between the US and China will be pivotal. The establishment of a formal trade consultation mechanism signals a willingness to address systemic issues. But the path forward remains fraught with challenges. If both nations can leverage this opportunity to foster cooperation rather than conflict, the future of global trade could pivot towards a more balanced and equitable framework. As we look ahead, the outcomes of these discussions may not only redefine US-China relations but also reshape the global economic order, influencing how countries interact in an increasingly interconnected world. The stakes are high, and the world will be watching closely as these two superpowers navigate their complex relationship in the months and years to come. As the global economy navigates the turbulent waters of international trade relations, the ongoing tariff disputes between the United States and China are reshaping market dynamics and prompting far-reaching consequences for nations across the globe. Recent developments signal a potential shift in trade patterns, with Europe poised to emerge as a dumping ground for cheaper goods as American businesses grapple with the financial fallout of tariffs. On May 12, the US and China announced a temporary truce in their trade war, pausing tariffs that had stymied economic activity and raised prices for consumers. Bloomberg highlighted that while this pause offers a momentary reprieve, the underlying tensions remain unresolved. With tariffs on Chinese exports to the U.S. reduced from an exorbitant 145% to a more manageable 30% and China's retaliatory tariffs on U.S. goods cut from 125% to 10%, both nations are still caught in a web of complex economic interdependency. The implications of this trade standoff extend beyond the U.S. and China, particularly affecting Europe. According to Bloomberg, European markets could become the unintended recipients of low-cost goods as U.S. companies look to mitigate the impact of tariffs on their profitability. This shift may result in an influx of cheaper products in Europe, posing challenges for local manufacturers who may struggle to compete against these lower-priced imports. Europe risks becoming a dumping ground if U.S. companies shift surplus inventory to avoid tariff penalties, a market analyst commented, emphasizing the precarious balance within global trade networks. The concern is that a surge in imported goods may undermine local economies and labor markets in Europe, further complicating the continent's economic recovery. In the U.S., the fallout from the tariffs is palpable, particularly within the retail sector. Major retailers like Walmart have warned that ongoing tariff pressures will inevitably lead to higher prices for consumers. CEO Doug McMillon stated, "We will do our best to keep our prices as low as possible, but given the magnitude of the tariffs, we aren't able to absorb all the pressure." This sentiment reflects a broader concern among businesses that are facing squeezed profit margins due to rising costs. Moreover, the ramifications extend to small businesses, which are bearing the brunt of these trade policies. A recent survey revealed that 2/3 of small business owners believe Trump's tariffs have negatively impacted their operations, with many struggling to navigate the complexities of increased costs and supply chain disruptions. As policymakers and industry leaders attempt to chart a course through these uncertain times, the stakes remain high. The recent pause in tariffs has sparked cautious optimism among investors, with market sentiments reflecting a desire for stability. However, as U.S. Treasury Secretary Scott Bessent noted, the consensus among both U.S. and Chinese negotiators is that neither side seeks a complete decoupling, highlighting the intricate ties that bind these economic giants. Looking ahead, the geopolitical landscape remains fluid. The U.S. government's approach to trade will likely continue to evolve as it seeks to balance domestic interests with the complexities of international relations. The potential for Europe to become a receptacle for cheaper goods underscores the interconnected nature of global trade, suggesting that the effects of U.S.-China negotiations will resonate far beyond their borders. In conclusion, as the world watches the unfolding trade saga, the focus will remain on how both nations navigate their economic relationship amidst ongoing tensions. The short-term truce may provide a moment of relief, but the long-term implications for global trade, particularly in how Europe manages the influx of goods and how U.S. businesses adapt, will be critical in shaping the future economic landscape. As the landscape of international relations shifts dramatically, the competition between the United States and China has increasingly spilled into the realm of space. Recent developments suggest a burgeoning space race that could redefine military strategy and the nature of conflict in the years to come. Analysts are raising alarms about the potential for satellite dogfights, a term that evokes images of aerial combat but in a domain that exists tens of thousands of kilometers above the Earth's surface. Reports indicate that Chinese satellites have been executing unusual maneuvering patterns described as zigzagging through orbit at alarming speeds. Such movements have raised eyebrows at the Pentagon, where officials are grappling with the implications of these actions. While the exact purpose of these maneuvers remains unclear, experts warn they bring these satellites dangerously close to American spacecraft, creating a scenario rife with potential conflict. China's advancements in space technology have been significant over the past decade. By investing heavily in orbital inspection, repair, and refueling capabilities, China aims to fortify its position in a domain that is increasingly seen as critical for national defense. According to the Secure World Foundation, a US-based research organization, China has developed one of the world's most comprehensive space defense systems and currently leads in anti-satellite ASAT technologies, outpacing even the United States. This shift in power dynamics has led to calls from American military leaders for the development of space weapons, a clear indication of the urgency felt within the US military community. The implications of this evolving space rivalry extend beyond national security, with China viewing space as a warfighting domain. There are concerns that these advancements could be exploited not just for defense but for offensive operations as well. The ability to capture detailed images, intercept communications, or even inflict damage on rival satellites could fundamentally alter the strategic calculus of military engagements in the near future. The increased tension in space is also reflective of broader geopolitical dynamics. As the US and China grapple with low levels of trust and transparency, the potential for miscalculations grows. The stakes are high as both nations strive for superiority while attempting to deter the other from aggressive actions. This atmosphere of suspicion and competition could lead to a new arms race, not just in space but in all domains of warfare. As the situation unfolds, it remains to be seen how US policymakers will respond to these developments, particularly regarding partnerships and alliances that could counterbalance China's growing influence. The implications for global security could be profound, and the technological advancements in space will likely play a pivotal role in shaping the future of military strategy. In conclusion, the trajectory of US-China relations in the context of space exploration and military capabilities is a critical area to watch. With both nations ramping up their efforts in what is increasingly becoming a contested arena, the potential for conflict may rise unless significant diplomatic efforts are undertaken. As we look to the future, the question remains: will space become the final frontier for the ultimate showdown between these superpowers, or can cooperative frameworks emerge to ensure stability in this new domain?